Welcome to the Tech Leaders Podcast. Gareth here. I interviewed Gareth Lewis, the CEO of Delio. Really interesting guy, ex-Ernst & Young, chartered accountant. Met his current co-founder when he moved on from Ernst & Young, worked for a smaller firm, and they saw a real gap in the private investment space. They created some very clever software which has disrupted that sort of space really effectively, and they're doing exceptionally well. They now have offices in New York, London, the head office in Cardiff, and they're flying. And we covered Gareth's entire journey. He was only 25 when he set up Delio. He's now only 30, so we covered this 5-year period, and it's a really fascinating story, culminating in the current situation around keeping his team engaged and productive during this irregular lockdown period. Yeah, love this one. I'm sure you will. Gareth Lewis. Well, thanks for agreeing to do this, Gareth. Another Gareth. This is going to be a bit challenging and a bit confusing, but this is the first Tech Leaders podcast that we've done in Cardiff, in Wales, which I'm really excited about. I'm aware of yourself, Gareth, and the stuff you've been doing with Delio is really impressive, the amount of growth you've achieved in such a short space of time. So I just wanted to start with yourself, really, and your journey. Yep. So can I ask you about your background and the journey from the point of leaving education right through to the point where you decided to set up Delio, or with your co-founder, of course?
Yeah, absolutely. And thanks for having me on. Yeah, so I guess I kind of grew up in South Wales, so from Llantrip Major. Did the university thing, so went up to Nottingham, had a good few years there, and then kind of went for that usual trend of being a graduate and trying to figure out what I wanted to do, what the best kind of route was for me. So ended up stumbling across the world of kind of professional services and Big Four. Took an interest in the corporate finance side, so mergers and acquisitions, and ended up taking a role with EY, so Ernst & Young up in Manchester. So a bit of an unusual route there, because I kind of started on a training contract, was there for kind of maybe sort of coming up to the 2 years, so rather than the full time there, and then took a role, got approached by a kind of a smaller boutique investment bank that was in Manchester called Convex, and actually kind of left my training contract, which was a challenge and an interesting story in itself, but then moved over to this smaller boutique, which ended up being a really good move for me, and spent 4 or 5 years there really before deciding to take the plunge and move back to South Wales, set up Delio.
Oh wow! So what roles did you have in this smaller bank then? What did you go in to do initially, and how did that how did it develop?
Yeah, so it was definitely kind of picking up on that real kind of passion for entrepreneurship that I had when I was growing up, and because the firm's fairly boutique, fairly small, but it was focused on kind of selling owner-managed entrepreneurial businesses. So got to kind of get real good exposure to people from all different walks of lives and backgrounds that had kind of gone on to build really sizable businesses of real success, and made a real impact across all different types of sectors, and up and down the UK and across Europe. So got real kind of first-hand experience working on deals, and it's effectively for these entrepreneurs, it's kind of the most significant milestone in their life, the day they kind of exit something that they've put 10, 15, 20 years or whatever of their life into. So it was really interesting exposure, and was kind of a big eye-opener for me, which kind of in a roundabout way led to us doing Delio.
So you guys would work with founders of specific types of businesses, like fintech or anything?
No, so it was more kind of broad. So there was a focus on working with owner-managed business. So it wasn't your typical kind of, it wasn't your technology VC-backed companies. It was more kind of it was industries such as like e-commerce and industrial and all different types of sectors, typically focused outside the M25, so businesses up and down the UK. I worked on some deals in kind of sports nutrition, e-commerce, and a couple of others, and it was quite very varied, very differentiated, and every process tended to be quite different, whether it was kind of selling to a US competitor that was looking to expand into the UK or Europe, or it was looking at how they could unlock part of the liquidity from selling into via private equity and things like that. So it was quite a broad range of stuff really, and I wasn't by any stretch of the imagination leading on the deals. I was very much kind of doing all the work in the background, all the hard yards and long hours, but it was good.
Oh, cool. So what were the main lessons that you took from that experience then, which have helped you in setting up Delio?
So I think kind of for me, when we set Delio up at 25, and I think the kind of that time from university through to finishing at Convex was useful. I wasn't going to be leaving with 20-25 years of financial service experience because I was only 25, but I picked up my chartered accountancy, which I never anticipated I was going to be an accountant. I was probably one of the world's worst. But
so when did you do that? How old were you when you became a chartered accountant?
So I did that as part of starting the graduate program at Ernst & Young, and then I finished it at Convex. So it was kind of a three year or so kind of time horizon. And that was kind of, that was useful in getting something under my belt because, as I said, I wasn't going to be going in with that years of experience and network and contacts, which often a lot of people, rightly or wrongly, tend to rely on as key drivers as to whether someone is rightly positioned to do whatever. But the key thing for me was just kind of really, I grew up in quite an entrepreneurial environment back at home, and then going on to see really successful entrepreneurs was a big eye opener. It was kind of things I tend to learn is a lot of these people that are finding these businesses were doing it for one of two reasons. They either had had enough about them to take the risk, or often the risk was thrown on them. They were backs against the wall and they didn't have much choice other than to go down that route and journey. And then it's just typically and these people were super interested. It wasn't just a case of again, different experience and backgrounds with a certain formula to success. It was just real kind of work ethic. It wasn't necessarily the smartest person in the room or the daftest person in the room. It was really that kind of commitment that I think was a key learning and takeaway I took from that time.
So talk us through that initial piece then towards the end of this experience and the Delio opportunity coming up on your radar. And how did it come up? Talk us through that bit.
Yeah, sure. So my business partner Dave, so we both kind of started our careers at the same time up in Manchester. So he started at Barclays, literally the same month as I started at Ernst & Young, and we got introduced by chance, and we just kind of developed quite a good working relationship and friendship, and we initially built a little networking type circle where we just kind of people in a similar position. There wasn't really anything going on at the time in Manchester for that kind of demographic, and we set up something very informal where a few of us would go for a few beers and something like that on a Thursday once a month, and we always stayed in touch and bounced ideas around. And I think that was I'd kind of always had the ambition to go and do my own thing. David was kind of very passionate about the wealth management thing, but we were quite a nice foil in terms of attributes and skill sets. We always had really good interesting conversations about lots of different opportunities. And one time Dave came to me with something that his bank was offering to the sorts of clients that I was selling businesses for. So essentially wealthy investors who have just created a significant amount of liquidity, and then now they're looking for interesting things to do with their money. So at the time, they came with me to what was essentially an investment club, which had a list of deals, a couple of sheets of PowerPoint, and said, is this something that the clients you're selling businesses for would be interested in we could use to potentially engage with them, or would your firm have deals and opportunities that might make sense to go in this investment club and be distributed to other clients of my organisation. And that was kind of a bit of a light bulb moment for us, is that we were seeing the sorts of people I was selling businesses for, very entrepreneurial, not your typical kind of slick back hair and smoking jacket type mentality of traditional wealthy investors, say 20 years ago, people from all different walks of lives and backgrounds. And their aptitude is for investing in stuff that they can know, see, touch, feel, and understand. And that's kind of why they've hence because that's what they've been doing for the last 20 years. In essence, is running their own business. And we kind of looked at it and said, this is an increasing trend, there's increasing demand to invest in more interesting private market deal flow. And we kind of, it was a little bit of a blur from there really, but it was kind of like looking at, it was essentially the initial idea of, financial institutions could do much more in the space for the clients to cater to this need. There'd be a winner, the clients would be a winner, their clients getting the access, the bank's keeping them happy, and the business model kind of just morph from there. And it was a little bit of a blur, but it was kind of toying with that concept and idea, lots of different variations, lots of iterations. It was it was on weekends and evenings, so it was kind of Sunday, after, unfortunately a little bit hungover, but having to spend the Sunday, putting the hours in to really kind of it just kind of felt it just there was just a good feeling about it. Just
so you were thinking about developing a platform at this point, then, yeah, which could be this intermediary between institutions and private investors. Is that
was our initial ideation? So it was essentially, was wealthy investors want access to private deals, and private deals want new forms of distribution and access to new investor groups, and that was the initial concept. And I think that's something that a lot of people have gone down in this industry, is trying to be a marketplace. And we quite quickly realised that we were going to do it a little bit differently. So we said, rather than trying to be the marketplace ourselves and be a Delio platform, we were going to go down the white label route and say we're going to provide the tools who are in far stronger positions to build those marketplaces with both sides of the coin. And a bank has already got the brand, the reputation, and the reach. Essentially, they've got clients they're already servicing for the other 80% of their wealth, all the traditional listed stuff, but they've also got access into broad varieties of deal flow. So you've got the investment bank that's doing lots of pre-IPO sort of transactions. You've got other clients of the bank who are saying, look, I'm going to invest in this hotel in Singapore. Do you know anyone that might want to go in with me? And that's always happened. Okay. But it's typically done in a very unstructured and fragmented way. It's always done off the side of a desk, and that's where we kind of felt like where we could make a bit of an impact and a difference was by going out there and saying, we're not the marketplace, we're the picks and shovels that enables organizations to build a solution on top of that caters to what their needs is. And that kind of took us down the route of what Delio is today.
Right, so you've got kind of a lift and shift platform you can put into the bank. They can obviously brand it, it's theirs, because it's obviously a white label thing. And then obviously that they can use it accordingly. Why don't they just do it themselves then? Well, what's the kind of USP of using your product over them developing their own?
Yeah, I think what we've been building it for a number of years now, and it doesn't just service big banks. We work with everything from your INGs, your Coots of the world, through to your small angel networks, and there's quite a broad client base. As we built out more functionality and use cases, the platform can be tailored for different needs, and that's kind of one of the things that what's won us a lot of work and probably got us through a lot of doors that we probably didn't have a right to get through when we were just sat in my mum and dad's spare room and starting the business up. So it's that configurability and flexibility of the platform, so we can mould the platform to different propositions rather than a proposition needed to be that lift and shift proposition fitted into the platform. Here's a platform, here's how it works, go and use it, move on to the next client. So that's the first component, is a combination of the flexibility and then the expertise in different use cases. We bring a lot more to the table than just the tech. So we help with the design of these propositions, we help with the managed service side of running these platforms. List goes on of I could talk about what we try to offer to clients all day. But then, so when you're weighing that up for a big financial institution, the cost of them building it and the speed that they could do that compared to what we can do, it's unparalleled. It's not really a competition. So that's become less of a competitive threat to us, especially as we've onboarded more and more big banks. But then the key USP, I guess, is that these platforms don't operate in silo either. So all these kind of white labeled walled garden platforms are built on the same technology. So if I'm a Barclays and I've got a platform and a PwC also have a platform, we can connect our platforms together, which is a process like adding a contact on LinkedIn. Once we're connected, we have the capability to share deal flow between our platforms. So I'm not saying that everyone does it in as simply as that. It is very much an online, offline industry because it's private markets. It's not liquid. But we have that capability for institutions to connect. So they're not only building their own walled garden proposition, they can build ecosystems and on an institution to institution, deal by deal basis. So that is something that you can't replicate by building it yourself.
Right. Yeah, absolutely. Because you're sort of agnostic, I suppose, aren't you?
So we don't charge anything like transaction fees. We're completely. Our pitch is that we're a non-conflicted service provider. Yeah,
absolutely. So you've definitely addressed that in terms of them building it themselves. But what is the biggest competition for you right now?
I mean, it's an exciting space. So particularly in the last couple of years, there's lots of people that have emerged, doing different things in different ways. So different areas of the space people would compete with in different ways. I mean, there's plenty of people looking to do white labeled platforms for the lower end of the market in terms of smaller deal size, angel investment, that kind of thing. There's plenty of people looking to solve problems there. Typically they come from the position of having built their own platform for their own use case like a website or whatever, and then said, oh, we can perhaps sell this to other clients, but instantly you fall into that conflicted position. You're essentially competing with your clients. Then, so that's kind of one category. You've kind of got, they're kind of, product focused, deal focused, where they're looking. So that's kind of the white label side. Then you've got different variations of that in different parts of the market, and we're probably the most end to end that we're aware of, kind of, especially when it comes to delivery for global banks. And then you've kind of got more marketplace offerings that, again, there's a little bit of an overlap, but they're just as much collaborative as they are competitive to us. So people that are trying to build marketplaces, we can actually, some organisations might engage with them rather than building their own solution, but arguably I think that's going to become less of a concept, but I do think some of these marketplaces will succeed. So we actually partner with some of these marketplace offerings and provide our technology in exchange for equity stakes. And again, just because we're in that non-conflicted position, we can do lots of interesting things that we don't think other people are able to do in the market.
Yeah, absolutely. I interviewed the chief technology advocate of Starling Bank recently, and he was talking about the success of their marketplace for their customers to engage with external products and things. And I think these kind of built-in marketplaces are definitely going to be the future. Obviously, you operate in a different part of the market, though. But I mean, it's I can see that going across all of the different areas of the market.
That's a long-term thing.
But this is a good segue into the tech side of it then. So I couldn't help noticing, I know we talked about your background earlier on, but you did have a stint with IBM, didn't you? Yeah. Back in, before you went to EY, yeah?
Yes, yeah.
What did you learn from working for probably the premier global technology business in terms of its history and things? Yeah. What did you take from that experience?
Yeah, it's interesting. So, I mean, I grew up in the IT industry, actually. So my old man had a business that was kind of manufacturing PCs when they were big, chunky box things and selling into public sector. So I got quite, I've kind of grown up in that industry and seen the kind of the growth and obviously the demise of traditional, technology and hardware and the move towards cloud and managed service and all that kind of stuff. So I think I took that kind of understanding and knowledge into the IBM time. And I think that's where I really picked up my understanding on the tech side and the entrepreneurship side, probably. So I want to give them some credit for that, I guess.
Because you were doing a sales role there, or
some sort
the
of,
IBM side you were involved in the sales life cycle, weren't you?
Yeah, the sales side, sales operations. I think that for me was a bit of an eye opener into the size and scale of some of these operations and the benefits and the drawbacks of operating such a beast. I think it was kind of quite eye-opening for me. You had you obviously had the brand in it. The saying is you don't get fired for buying IBM, and I think that kind of having that kind of backing behind you as a salesperson in IBM, is arguably going to make the job a good one. And I quite like how they've kind of evolved since then as well as a business and developed their niche, and they continue to be there. But I also kind of learned of some of the more negative aspects of being such a big organisation in terms of the lack of ability to perhaps be as mobile as a smaller, more agile business. Yeah. And I didn't get much exposure to the cost base, but when I try and look at what they their cost base and just for small divisions in that group, it's just it is the magnitude and the scale of it was quite impressive for me, because South Wales, I hadn't really absorbed that London scale. I saw my dad's business that was 50 odd people. It's a high day, but I hadn't really seen something that was 50,000 plus whatever it is.
Well, it's one of the biggest. It's probably one of the biggest companies in the world, I suppose. Isn't it? But so let's before we jump into the tech, then actually I did want to ask you in terms of, because you're building a company here, and one of the biggest challenges is building a culture which is going to enable you to scale. Surely, obviously, you took some lessons out of the IBM model, and obviously the very established company. I'm sure you did as well with Ernst & Young and the company you joined after that. But what kind of culture do you want to build here?
Yeah, I think the biggest driver for me was kind of my time at Convex. I think was what kind of inspired me from a culture perspective. I think tried to we're obviously operating in quite a serious industry in a serious market, and we've got serious growth plans. But I'm very much kind of an advocate of having a good time doing it, and I'm quite passionate about the whole Wales punching way below its weight, Wales, people setting the bar too low consistently, and there not being many success stories with which to build an ecosystem. And my view is that you can't manufacture that. You need to have real organic success stories of people doing things taking Wales to the world, rather than Wales, trying to bring people from the world to Wales,
Yeah.
because the only way you're going to get people inspired to go and do their own thing or go and make a difference and an impact on the economy is by them seeing other people doing it.
Yeah.
That brings and drives the ecosystem. So that culture is essentially the commercial driver of our culture. Is, you know, we are doing something that's on a global level, and we're not just, and the market isn't just Wales, it's not just the UK, it's the world. So we've had that global aspect and culture since day one, and then I think we try to I love finding people and guys and girls that haven't necessarily had the opportunities that we're able to offer with Delio. You know, not because they don't deserve them or anything like that, just because of, you know, some of the organisations that have operated in the country traditionally haven't necessarily had that growth mentality. So really enjoy seeing people come in, and we expect one thing from them, and them come in carving their own role out in the business and taking ownership, taking some leadership, and then really making a difference there. And then I'd rather do that than give them a prescriptive role, and then we can then backfill what we need then to really kind of complement their skills.
Yeah, absolutely. I just wanted to latch on to something you said there about Wales, because it does seem like an exciting time for Wales at the moment in the fintech space, doesn't it? I mean, Starling Bank have just announced they're going to be hiring 400 people just down the road. Monzo Bank are here. I know PwC have invested a lot, as have Deloitte. There's Currency Cloud, who are in our building, who are expanding their operation. Multiple other smaller fintechs as well, and you guys are definitely in the mix with that. Why do you think this is, and what do you think the future looks like for Wales at the moment?
Yeah, I mean, I'm a little bit maybe controversial. I think the real, you know, success and the cornerstones of the industry needs to be homegrown businesses, because they're more bought into to making an impact here and doing stuff. So, but I've seen a real step change in the last couple of years. When I first moved back in 2015, there wasn't the ecosystem was nothing like it is now. I think people are being, you know, savvy, really. I think a lot of the businesses moving here, it's not necessarily for their passion and pride for the country. I think it's a good business decision. You know, you can run a cost base. You know, we're a team of 65 now, and we've been able to do that. You know, we would never be able to get to a team of 65 if we'd been based in London or New York, because, you know, our cost base is a fraction of what it is in thing. And I think there's a general thing with Welsh people. While sometimes I think ambition, you know, we could do more on the ambition side. I think more needs to be done to encourage ambition. You know, there's a lot of characteristics that I think are very appealing. It's generally nice people, generally, you know, well-mannered, able to hold a conversation, engaging, honest, trustworthy, loyal, and they're kind of, you know, if you contrast that to maybe a more established ecosystem, it's much more, there's many more people doing lots of things, so you're a small fish in a big pond, and that tends to mean that people will move in and out much more quickly, go to new roles, and, you know, that kind of stuff.
Yeah,
I don't think you have that so much. So I think
the market's a bit more transactional, isn't it? People tend to move around more in bigger cities. And
I think that's. I mean, obviously it's great news to see lots of these businesses, you know, choosing Wales, but you know, for kind of Welsh-based founders, it's probably a double-edged sword a little bit, because you know, you don't want to see you know, your best people being constantly kind of hassled to come and join another firm. So it's fantastic in terms of how much it is established. I think the real driver there will be some homegrown success stories, and I think that will encourage it even more.
Yeah, definitely. Yeah. Well, we actually get asked by companies who are thinking about moving to Wales as to why they should move to Wales or open an operation in Wales. And I think that one of the big ones that you did mention there is that it's an attractive prospect for people to move to Wales, because the property ladder is achievable for university leavers and younger professionals here, whereas in London it just isn't, is it? You know, it's very difficult to get on the property ladder. And also, the links are really good into London. And crucially as well, I think it's worth saying that Cardiff punches above its weight in terms of, like, you know, because it's a capital, you get lots of sport and events here. There's a fun vibe in the city. There seems to be a lot going on.
It's come on massively.
And so it's a great place to grow a business, I suppose.
I mean, I think more needs to be done on the talent side to attract people who have, you know, if when I sometimes speak to recruiters and we're looking for a specific role, I know we're not going to find masses of private market technology experience in Wales, because there's not really the industry there. But, you know, if I'm looking to recruit, my first thing I'd be doing is probably looking for people in the age bracket of 30 to 40, working in big financial hubs with the surname Jones, Davis, that type of stuff. Probably at a time in their life where they may have a an aptitude to maybe move home. And we've actually found some great talent from people that have gone off and had super successful careers elsewhere in the world, and then decided for family reasons or quality of life reasons they want to come back to Wales, and that's been a real good talent pipe for us.
Yeah, absolutely. No, that's great, and long may it continue. I think it is quite exciting for Cardiff at the moment. It seems that I was actually in London the other day, and it was in the London Underground. There was like a Welsh Assembly poster on the wall.
That, yeah.
Did you see it? And
One
it was
of my friends literally took a picture of it. Sent me it.
Yeah, should have had you guys out there.
That was my exact comment. I said I'm a bit upset that Delio aren't on.
Yeah, because it had Starling Monzo and a couple of other companies on there. So yeah, you need to get in touch with them and say, why is Delio on there?
Probably will.
Yeah. So I want to jump into the tech, okay?
Yeah.
I wanted to ask you about the integration challenges. You're obviously providing a white label product to banks.
Yeah.
Institutions are notorious for having, I talked about this in a podcast recently, we were calling them zombie boxes, and what we were talking about specifically was legacy systems, monolithic systems, which have been there for a long time. What integration challenges have you had in terms of your product?
I think that we've actually been pretty fortunate with that. I mean, because it was by no means by planning or strategy, but I think traditionally what we're replacing, there's two things. Either there's lots of different use cases in the platform, so this is a bit of a in a bank, so this is a bit of a generalization, but typically what we're replacing is not necessarily legacy systems, but it's stuff that's done off the side of a desk or via email, PowerPoint and Excel. So, or we're replacing we're not replacing anything because it didn't even exist in the first place. So typically, we've built, a cloud platform that can be spun up in minutes. We're never the ones kind of holding up a deployment cycle for any of our clients, to my knowledge anyway. So the great thing about that is you can get something up and running quite easily to test and proof of concept, and then we can configure and iterate as we go. That's how we've built our offering and our value proposition. So the platform doesn't need to talk to lots of different systems in the bank, which has helped us overcome a lot of those challenges. But now, as we're growing, we are finding that as this is becoming more mainstream private markets, a big thing for the banks is providing a holistic view. So the clients want to be able to see everything in one place. They don't want to be logging into one platform here, one platform there. So we are starting to come across those integrations, whether it's single sign-ons into CRMs, into other banking platforms, which is a great thing for us because it's an indication of the fact they're trusting us to do that is a good indication of the quality of the service we're providing. But it also kind of and it creates creates stickiness. It's difficult to like a lot of these legacy systems that are there from the 80s. I'd like to think we'll be there till the 2040s, 2050s. So so it's I wouldn't necessarily say that the challenges are more coming up more frequently, and for us it's on a global scale. So we're looking at how we deploy into different types of data centers, whether it's on premise or alternative data centers to what we currently use. But they're kind of nice challenges to have. They're big projects, and by overcoming those challenges, we're going to be able to scale that across our client base because there's similar challenges bank to bank. Every bank's different, but there are some commonalities, and we need to have the right people and infrastructure in place to be able to do that.
What technology innovations are you most proud of so far that you've achieved in Delio?
So I think for me, it's a little bit more, a bit of an old school mentality is, we're working with typically a very under-digitalised market, wealth management, private banking, through that private market deals space, whether it's real estate, social impact. It hasn't really. There's lots of people trying to do different things and like to cling on to buzzwords, be it blockchain, AI, machine learning, whatever it is. It depends on what month. But we've just focused on fundamentally creating the foundations by digitalising processes that typically weren't digitalised. So I think what I'm proudest about from an innovation perspective is being able to develop that intellectual IP and rolling that out into a simple, easy to use software solution. I think too many people get too far ahead of themselves when obviously you've got to do phase 1A, you've got to do part A before you can get to V, X, Y, whatever. So been pretty, and now we've kind of done that, we are now able to then start saying, well, what other technologies and innovation opportunities can we take advantage of and plug into our infrastructure? So that's kind of an exciting opportunity for 2020, 2021. But what the guys have built, in terms of flexibility, configurability, that's probably the key bit of innovation that we think we've done pretty well on.
You are relatively young for somebody who's pushing a business in this space, though.
Yeah.
I believe. Do you get that sort of thrown at you, whether it's a good thing or a bad thing, I don't know, but it's probably a good thing. Does that come up very often? Are people surprised by that?
I think. I mean, so I set the business. I moved back in with my mum and dad when I was 25, and I spent all my money on nights out, so it wasn't like I had a big pool of capital to rely on. So me and Dave started the business with a £7,000 personal loan. He stayed in his role for a year and funded me for a bit. So that was at that point.
He always reminds you about that.
Yeah. Well, I always remind him about what I did in the year, so it works out pretty well. He's so he kind of stayed in his role and then came on board kind of when we had enough headroom to really go for it. So at that point I think it was I did feel a bit conscious of it, especially because I wasn't by any stretch of imagination a wealth management or financial services expert. That was more Dave's domain. He knows a lot about the space, and me not so much. And he'd admit to being a bit of a nerd around all that sort of thing. So I was a little bit conscious of it, but it was things like that chartered accountancy, that EY and the CV, that time in convex and exposure that gave us a little bit. We didn't have a network, but had that couple of years that was we could always, it did help open doors, but it's not like we had 20 years at JP Morgan or 25 years at things. So yeah, back then it was, but I think now kind of we've surrounded ourselves with good people, better people than us, and yes, I'm 30 now, and I think it's actually a great thing, because I've got I don't have the big family with I can get on a plane tomorrow and fly to wherever. I'm not bothered. I'll go and do
jealous.
it. Yeah. Well, pros and cons, and so I think it's and I've got the appetite to go and work as much as I need to, and as well, we've got a young team, so I'm able to engage, and I go out with a lot of the lads in the team and stuff. So it's and now the grey hair's coming through anyway, and so
you seem to really enjoy it though.
Yeah. I think there's certain days where you're like, oh, what have I done? But yeah, more often than not, I'm having a good time whilst doing it. So
do you have a mentor?
Yeah. So I've definitely people I've worked with along the way that I've got a lot of time, and would always take advice from. So my old boss at Convex, actually, I went and told him that I was leaving. Had a good close relationship, and he kind of said, okay, good luck with that type thing. And I came back to him a few months later and said, this is what I've done, and he actually then invested. So he's still close with Neil, and he's given me a lot of kind of help and advice and guidance over the years, and backed me probably at a time when no one would have necessarily backed a 26-year-old with an idea on a napkin type thing. So he's definitely helped a lot along the way. Then there's people in the company as well that I've brought in, like sort of another Gareth who is quite a
Gareths are everywhere in Wales.
We've got four Gareths in the team.
Oh really?
And actually David's actual first name is Gareth. But
is it really?
David? Yeah, it's Gareth David Newman. So can't make it up. But I didn't know that until we incorporated the company. So Gareth and the team as well has been he's had a fantastic career. So he's a very good guy to sounding board. So it's nice to have that in the business. And we've just appointing a chair that's kind of, I was always a little bit hesitant of, did I want, most people go early on and try and get lots of big name CVs on the board. I'm not really driven by that. I'm not really that bothered. As much as the industry is, I'm probably a little bit the other way. But I've always kind of been a bit hesitant from appointing a proper board, and I think that was kind of something that Maven wanted us to do with them coming on. So actually in the process of appointing someone that has already been a real good kind of mentor and guide for me as well. He's kind of been through the exact journey we're going through, built a really successful financial technology company. Doesn't usually get involved in companies our sort of size. Has typically worked with larger companies on a non-exec basis, but decided to probably didn't want a quiet life anymore, and has decided to come and help me out with it. So that's been positive. And
well, I'm sure someone with battle scars like that, someone who's been doing it for a long time, I'm sure you learn a lot from just working alongside that person, don't you?
It's great. Yeah, it's great. And even it's even like having good people on hand. So the chap that leads the funding, the guy, investor director from Maven, who's our investor from the last round, he's actually a friend of mine. We both started in accountancy college together at Ernst & Young up in Manchester. So it's
all right.
Yeah, I try to surround myself with people that are people I can relate to and are honest and trustworthy. I don't like to beat around the bush too much.
No, of course. So what else do you do to sort of develop yourself then? do you read books? Do you sort of do you have any hobbies or anything that kind of help you focus your mind and things like that? Yoga or whatever? I don't know. What do you generally do to stay focused and keep learning?
Yeah, so I mean, I'd like to say I read loads of books, and I wish I had enough hours in the day, but I've got a stack of books about this. But people hand me lots of books.
It's all about Audible. Yeah, Gareth, you need to get on Audible.
I know, I've started on the podcasting when I'm in the gym, but a lot of people say, oh, you need to read this, and unfortunately, the pile seems to be getting just bigger and bigger. For me, it's about kind of having my life. I'm very, very organised. I like to have everything done in certain ways, kind of. So I'm up very early, lots of exercise, so that's the key drive for me. Sport and the camaraderie of team environments and the gym and that kind of stuff is kind of what keeps me sane. We've got a Delio boxing club, so I was there this morning, so a few of us go and knock lumps out of each other on a morning, which probably isn't quite sensible on a HR front, but
it's a great way to start your day, though.
But it's good for fitness. So I think that's because I fly a lot back and forward between here and the US at the moment, so lots of overnight flights and lack of sleep, but I try, and even if I've only had 2-3 hours sleep, I try and get up and exercise, because that gets me right for the day. If I don't, I'm a bit of a zombie by 3 o'clock. So it's definitely having all that, and I like to have my life organised. I like to have clothes in order. It's all that kind of stuff that keeps me doesn't help me learn, but it keeps me sane. And I think I just tend to just pick stuff up as I go, really.
Okay, brilliant. So if you were to sort of, how old were you when you set up Delio? Did you
just turned 25? Yeah,
just turned 25. So if you were to have a conversation with your 25-year-old self, in going through the journey you've been on, what advice would you give to that person?
I think it's definitely everyone tells you that, this is very common, so I'm not saying anything unique here, but everyone tells you how difficult and challenging and how hard it is running a business, being an entrepreneur, blah blah blah. It's that amplified. It's so much more challenging than you can ever anticipate. Like some of the things I look back on the last few years or whatever, and some of the stories I just can't. I mean, Gareth always say that I should write a book, but I just don't even have time to think about it. You just like now it's just the most ridiculous thing can happen on a day, and I just bounces off me. It's just so I think that's one bit. But then also I was very much, when I first started the business, I was very up and down. So like when we got an email back from a CEO of a wealth manager, I used to get like really excited, and then when he'd tell me he's not actually that interested or wouldn't arrange a meeting, I'd be like really bummed out. And it's kind of that I was like this, I was up and down all the time, and I've kind of just learned to really to level that out. I think that's the best thing that I could have. That's the best advice I could probably give myself 5 years ago, is try and get to that point a bit quicker.
Yeah, keep your emotions in check. Yeah. Don't get too down with the downs, don't get too high with the highs. Story of our life.
Exactly.
Okay, so I wanted to get your thoughts on the future of the financial services industry. Okay, there's been a lot of turmoil since 2008. Massive regulatory challenges for companies like yourselves. I'm sure you've obviously had a lot of that in the early days. Yeah. How do you see the financial services sector panning out over the next couple of years? What big changes do you think are going to happen?
Yeah, so I think it was interesting when they kind of first, fintech's not something that's new, but there was this big kind of wave of, which was essentially like what I call fintech 1.0, that whole disintermediation play where we're going to build these business models that change the way things are done. And I think that was the big thing, and that's where you saw your TransferWises and all that come through and really do some amazing stuff when you look at valuations and probably returns and that kind of stuff. Wish you got in on that. But then they kind of had that second. I think now we're in that kind of second wave transition where it's more kind of about working with existing institutions. So a lot of the bigger organisations are responding to change, being more agile, being more open to ideas than they perhaps ever would have been. And then certain players who have already established themselves are looking at what we can do to consolidate, acquire, and things like that. So you've kind of got that really interesting kind of M&A trend across most of the industries. I mean, you look at how many payments companies there are now, for example. There can't be that many use cases for payments. So there's definitely going to be some consolidating on that side. But I think fundamentally, the banks and some of the large organisations need to adapt and change the way they're doing things. And unfortunately, that means a lot of cost cutting. So every week you hear about a different bank, reducing headcount, reducing workforce globally. So there's some massive shifts there. I think that will create a talent pool opportunity within fintech. So I think people will be able to get some new perspective that they wouldn't be able to get before. But I think a lot of the people working in these organisations might need to take a bit of a salary cut. That's the big thing. I think just in terms of lots more people opportunities for, and making that shift from industry to the financial services technology side of things. And then and I think that's kind of the biggest shift I think we'll see. And I think that also creates an opportunity for financial services to be less focused on global markets, global financial centres. I think that, you know, with the use of technology, we could definitely start looking at how you know, other geographies can have a significant financial services industry, because you don't have to be all centred around a trading floor. So.
Yeah, no, absolutely. I tell you, one of the big innovations in financial services I'm seeing at the moment is convenience. I mean, everything is just at a fingertip. You know what I mean? It was very difficult to invest not that long ago for the layman on the street to invest in quite complex index funds and you know, things like that. Whereas now, I mean, it's just you can go on your phone and
democratization.
Democratization is exactly what I'm talking about.
Point,
I just wanted to ask you, obviously we're in the midst of a pandemic situation. We're in the midst of lockdown. It looks like it's going to go on until probably the end of May at the earliest. Tell us about what you've done with your team and how they are managing with the situation, and what you're doing to sort of keep them engaged and productive.
Yeah, no, sure. So I think you know, we've taken it for what it is. It's obviously not a great climate, but I think the team have adapted, you know, as well as can be expected. They were fantastic, in fairness to them. So everyone kind of went remote mid-March. There was some people in the team that already worked remotely in certain geographies. We had you know, client-facing teams in different areas, and they've also, obviously for them it's quite a natural progression. Similarly, some of our team were quite well accustomed to it, but you know, even the ones that weren't necessarily well accustomed have just picked it up and taken it for what it is, as I said. And I think doing what we can to keep things as normal as possible and keep everyone motivated and moving forward. There has been, you know, less distractions for the team, so, you know, we're able to work on more products, think a bit more, take a step back and look at customer needs and see how else we can solve them. So it's given us time to, you know, get our ducks in a row a little bit, which often is difficult to find that time when you're in constant growth mode. I think it's obviously been encouraging for the team as well that we haven't had to make any cuts or anything like that to date. So that's been, I think that's helped provide people a bit of comfort, because I think they realise that they could be in a lot worse situation. So people are kind of, I think, grateful on that side of things and doing what they can to make sure that stays that way.
Have you had much of a knock-on effect on your order book in light of the lockdown?
I think so. Obviously, we're financial technology, and I think that's been you know, the themes and the trends that we were conveying to the market around the importance of digitalization and the role of omni-channel relationships, so online and offline engagement in things like private banking and investment for private markets. I think has helped. It's been a helpful position. I wouldn't say it's completely, you know, been the key driver. I think this change was happening anyway, but I think it has helped illustrate the importance of it. I wouldn't say the order book has dropped off. Some things have happened quicker because clients are realising they need to do something. We've probably had our highest amount of website inquiries last month than we've ever had historically, which I thought was quite interesting. And you know, some things have had to slow down, where potential clients and prospects have had to focus the time elsewhere, a little bit of firefighting. But I think overall the trend's been fairly constant, and you know, some of the bigger contracts we were working on anyway we're continuing to move forward in the sales process, and with the hope of getting them over the line. So yeah, look, as I said, I think there'll be a few you know, unfortunate situations where we might lose the odd client here or there, particularly on the smaller side. But as I said, overall, I'm quite grateful for the area we're operating in, and don't so much sympathy, because I think there's people in a lot worse positions than we are.
What positives will you take from this lockdown then? Have you learned anything about your business and about your team that you'll take forward?
Yeah, I mean, I think the, you know, definitely the value of trying to eliminate distractions and noise is really powerful for productivity. I think trusting people is definitely something I feel like we knew anyway. But giving people responsibility and trusting them to go on and execute, I think is the team have proven that works, which is great. For me personally, it's given me an opportunity to think about a lot of the things that, as I said, I haven't had time to focus on historically. You know, looking at every incoming, outcoming, and understanding a little bit more clearly on the cash flow side of things, and also getting the time to really, the time I've usually spend on a plane, I'm now getting to spend actually thinking a bit more strategically and moving a few more of the bigger projects, be it big fundraising, strategic relationships forward. So it's definitely it's not made me any less busy, which I think I've learned it's going to take something special for that to happen, but I don't necessarily think I ever want that to happen. And yeah, it's about spending time. Yeah, it's been good to spend time getting the ducks in a row. Really, I think it's made me realise that's important to have your own house in order before you start trying to take over the world or whatever.
Have you done any Zoom quizzes or any socials with the team since the lockdown?
I keep getting called on calls late in the evenings in the States, so I miss most of them. I was going to try and get on. We had a weekly Delio quiz, which different people have been doing every week, which I think has been going down pretty well. I mean, I was meant to join the last one, but I was late, so I missed it. But I joined anyway. So everyone's staying in touch and spirits are high. We're having a good laugh on Slack and things like that, all as good as you can. But I think everyone's looking forward to getting back in the local, which we do hope will be in there. Hopefully be able to do that when it's safe to do so.
Okay, so finally then, I understand we've come in towards the end of the interview now, Gareth. So I wanted to ask you about, first of all, the future of Delio. I know you spend a lot of time in the US at the moment. I know you if your partner's listening, you live over there. Tell us about the plans in the US and the plans in general. Yeah. We've covered a bit of it so far, but what have we not covered?
Yeah, no. So I mean, we kind of closed around mid last year. Kind of, I said, growing the team to 65 active in 7 locations globally. So we've got people on the ground in a lot of the key markets for us, which is your Singapore's, your Dubai, Sydney, Geneva, and obviously a team in London. And then I'm kind of travelling back and forward at the moment to New York to kind of establish some connections there. I think key thing for us this year is executing, and there's 3 things: it's revenue, product, and funding, and it's that circle that they're all kind of contingent on each other. We need more revenue to raise more funding, need more funding to deliver more product, need more product to generate revenue, and it's just making sure we can spin that circle as quickly as we can without overdoing it, and creating challenges there. So that's kind of the near term focus. But it's if we just execute on our pipeline of big financial institutions this year, we're in such a great position, and from there we can look at how we unlock other use cases in the bigger organizations. And then for our more boutique clients, we're looking at what other services can we offer up and down the value chain. So that's kind of the wider strategy that we'll try to implement. There'll be nuances for different markets, but that's generally going to be our approach to each market that we're operating in globally. We want to put more people on the ground in these markets so we can deliver a service that we're proud of. So not just sales, we want account management, we want support on an international scale. And we're at a stage now where I think we can have conversations with some of these big strategic partners, these big beasts who are interested in the space, and say to them, look, we can really bring something interesting to the table. Let's look how we can do that. So we've got a strategic alliance we're going to hopefully announce last week. That's been kind of 3-4 years in the making, which has been quite an interesting process. And there's a couple of other things that with this next funding round that I think could come to light, which could really help us do, I think one of the larger raises that's ever to come out of Wales is my ambition, and then how we can then deliver on what we're promising.
Fantastic. Well, it sounds really exciting. Be really keen to see how you guys develop over the next couple of years. You sound like you've got a really good model which is very scalable. So I think it's great for South Wales business as well. So I wish you all the best. But thanks for your time, Gareth. I really appreciate it. It's been a fascinating interview. So much appreciated.
Yeah, thanks for your time. Appreciate it.